Good morning, trading world. It is April 21st, 2023, 7:20 a.m. on the East Coast, and this is my pre-market outlook and technical analysis for day trading the markets. The title for today's outlook: as we get closer to a rollover, sectors are almost aligned to all participate in a flush. You need to be aware of an alignment between sectors and stocks. I don't have time to go through all stocks, but we can look at sectors to see how the dominos are lining up. Starting with XLC. We can see the daily MACD is crossed to negative momentum, but still is in an overall bullish trend because it's above the zero line. The trend for now and the RSI is near its rest area, meaning it's not bullish and not bearish yet. So we can get somewhere here a little lower and we can still see a pop back in price action to the positive side at any moment. Keep that in mind as I talk about rest areas as we go through the rest of the sectors. But that is XLC. And let's go to the next sector, which is XLE, the energy sector. Its MACD is closer to going downtrend overall because it's so close to the zero line. And as you can see, it is in the process of going negative momentum. So it could be back into a downtrend very soon. The RSI is also headed into its rest area. Let's go to the next sector, which is going to be the financials. Now, the financials have been beaten up more than any other sector. So, right now, the XLF is already in a downtrend overall. As you can see, it is below its zero line. But it still has some positive momentum going, and the RSI is turning back toward its rest area. So those are the financials. Let's go to the next one, which is XLI Industrials. Now, the XLI, which is a defensive sector, has positive momentum, but is neither bullish or bearish. And that's because we're straddling the zero line. And as you can see, for a long time in price action, we've just been in this sideways chop, showing you how it's basically trendless. The RSI here is in no man's land. It appears to be turning back toward its rest area. Let's go to the next one, which is probably the biggest risk on sector right now, which is XLK Technology. XLK definitely has negative momentum and is in a bullish trend, but for how long? Because it is clearly headed back toward its zero line. And the RSI is headed toward its rest area. So that is the tech sector. Let's bring up the next sector, which is XLP, consumer staples. This is also a defensive sector. XLP has a MACD that is flattened out, which should go negative momentum at any time, and is near an overbought state on the RSI. This is the overbought state with a MACD that's pretty much ready to flip over and go negative momentum. So there's not going to be a whole lot more activity at the moment. We're at this point of going overbought, which it could stay in that state for some time, but just looking back at the MACD, it has an easy path to flip negative momentum at some point. And I'm just pointing things out right now, and I'll come to the end and we'll go back through what all these sectors have in common. And that brings me to the next sector, which is another big defensive sector, XLU, utilities. It has a flat MACD, which could go negative at any time, and is coming out of a near overbought state on the RSI. As you can see, it looks like it's pretty much ready to cross into negative momentum. And as you can see back here, you have to kind of curve fit the RSI at times. If you look back and see that it's been up here, I myself would kind of consider this overbought, considering the amount of time that it spent right here without going above 70. So I would consider this its overbought state. Let's go to the next sector, which is XLV, which is healthcare, which is also another defensive sector. It is close to turning negative momentum on the MACD and in an overall bullish trend, and is headed back toward its rest area on the RSI. So the easiest path for healthcare right now is down. And the next sector and last sector is going to be consumer discretionary. Now, XLY is losing positive momentum on the MACD in an overall bullish trend, and its rest area and is in its rest area on the RSI. all 9 sectors have something in common. They are all near or in a position where immediate change in momentum could be negative, even in the defensive sectors. The importance of this is that over the next couple of weeks, if we get some real sell-side activity in the markets, there will be nowhere for money to run and hide. Every sector, every stock have the potential to get hit, which makes the next threat of sell-side activity very dangerous. Now remember, the monthly time frame overall in the market, in the SPY or even the futures, it is in its rest area, and this means we could easily drop to 380 and pop back up to 400 like nothing happened. So be careful. This brings us to the key levels of the day. Let me bring those up. All right, here we are back with the key levels of the day. Starting on the support side, we have our jack support at 410 to 409 area. Queen support 408 to 407. This is actually where my target is, in this 408 to 407 area. Actually, I have the first primary target is right here at this 409 area. And then this purple line here is the weekly market makers expected move, which is at the close to that 406 area. So those are the 2 primary targets for the day. Then we have our king support area, which is the 406 all the way down to the 403 area. On the resistance side, we have jack resistance at 411 to the 412 area. Queen resistance, which is 413 to the 414 area. And there is a lot of resistance laying up here between this 412 and 413 area. And we have our king resistance area, which is going to be 415 all the way up to the 417 area. The main thesis for the day is bearish, closing below 411.88 with a projected target low of between 411 and 407. The alternate thesis is bullish, closing above the 411.88 with a projected target high of between 412 and 417. The main channel we're in is between 397 and 416. Yesterday, market strength and breadth opened gap down and fought its way back to close the gap in a range-bound session where after closing the gap, it went back down to test the lows of the morning. I expect strength to open weak again, spending more time after the open feeling out lows before finding strength to push up for a good size move up. We have dissonance between the technical side, which is bullish, and the quant side, which is bearish. However, the futures have a bullish bias for the day with harmony between the technical side, which is bullish, and the quant side, which is also bullish. Meaning it gives me more faith that even on the ETF side, on the SPY, that we could end up with a good size up move on the day. This brings us to the scenarios of the day. All right, our first and most probable scenario of the day is going to be our trend day down day type structure, meaning we open gap down, start with a pushback toward the previous close represented by the blue line. We find resistance on or before that previous close, then begin the downtrend for the day. We usually find midday chop around either the possible queen or king support. But today, instead of a vice versa alert, be aware of a possible trend day fail. And a trend day fail is where we reach our target, which could be either the 409 area or the 406 area. And upon reaching that target, we could get a complete reversal off of that area, whether it's 406 or whether it's the 409 or the 406. We could see this extreme reversal from that point. So be aware of that on today's trend day. All right, the next scenario is our expanded range day structure. We can have a lot of chop early and spend more time filling out lows after the open before finding that pocket of strength that lifts us up for a good portion of the day. As you know, the previous 2 days, as soon as the open hits, we're almost in that stance of getting ready to take off to the upside pretty much, and it's kind of slow each day. And I expect for it to slow down a little more today, where we kind of feel around a little more after the open. But this is our expanded range day structure. All right, our last and least probable scenario is going to be our rounded reversal day type structure. We could get a continued push, and let me correct this right now. All right, now I have the correct heading up, but we could get a continued push lower toward the jack or queen support area, find midday chop around either the queen or king support before going back up with the same energy or force we went down with the first part of the day. This is our rounded reversal day type structure. Right now we're kind of in this expanding area where the daily is taking control and trying to turn everything down to a negative momentum. But we're also right at that point where it's not quite turned everything on the ebb and flow side to go negative, but you could also have another push up. So we're going to play this game, it seems like, for a little while longer of this down, 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 up, strong, and up, and then down, 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 down. So be very careful right now because things are changing, and I would be very, very careful about overstaying my welcome on the bullish side of things from now. I do believe we're going to get, I've been saying it for a while, I've said it so long, so early, that I've stopped kind of reminding you of this blow off top type of a day that I was looking for, this super trend day. I'm still looking for it. It is still coming. But we've had this long drawn play out because of the time frames fighting for power between the daily, weekly, and monthly. and they're all at odds, with the daily now trying to turn negative, the weekly still at the upper edges or last gasp of its positive side, and the monthly just kind of in the middle at its rest area. So it's going to be really choppy for a while until things are played out on the weekly at least. But those are the things that we have to look forward to. As always, your most important job as a trader is to protect the capital that you already have. We do this by knowing and understanding the risk that we have on in positions, not only the risk in positions, but the risk in the current conditions of the market itself. And then we manage those risks in accordance to our account size. I hope this helps. Wishing you a positive trading day. Let's go out and make it a great one.